You're listening to Corner Room, where we break down the stories behind the headlines. Welcome back to the Deep Dive. I'm Alex, and with me, helping us make sense of what looks like a massive flood of capital into this space, is Maya.
It's great to be here. Yeah, flood is the right word. This is a big moment.
So today, we're really digging into some sources that, to me, signal a real inflection point for digital assets. We're sort of moving past that whole retail frenzy narrative. And we're diving straight into the world of, well, institutional power. Our mission today is to connect the dots between three really powerful trends we're seeing.
Right. We're looking at huge corporate holdings, for one. Then there's the really sophisticated regulatory work being done. And finally, where the smart money is actually placing its bets.
Exactly.
And for you listening, I think the biggest takeaway here is that this isn't speculative anymore. The sources really show that traditional finance, TradFi, isn't just watching from the sidelines. It's actively building. We're going to trace that evidence today.
Okay, let's unpack this then. And let's start with a number that is, well, it's almost hard to believe. We're talking about the crypto assets sitting on just one company's balance sheet. Bitmine Immersion, BMNR.
BMNR is such a fascinating example of what this institutional commitment looks like. The first thing that just jumps off the page is their Ethereum holdings, their ETH.
Right.
They're reporting a stash of 4.066 million ETH tokens.
4.06. I mean, that's just a staggering concentration of ETH for a single company to be holding.
It is, and it doesn't stop there.
And it's not just the ETH, right? The sources say that their total crypto and cash holdings, when you put them together, hit an incredible $13.2 billion.
$13 billion. That's a balance sheet that rivals established financial players. And the digital asset part isn't just some small slice of that. It's a huge piece of the pie.
So what does that signal to, to Wall Street when they see a balance sheet structured like that?
Well, what's so interesting here is the strategy. You have to remember what BMNR does. They're an infrastructure and mining firm. And, historically, firms like that were all about Bitcoin.
Sure.
But holding over 4 million ETH, that shows a really deep strategic belief in Ethereum's utility, its long-term value. It's likely tied right into their core operation.
Okay, so this isn't just speculation.
Not at all. And that $13.2 billion structure, liquid cash right next to a massive crypto reserve, it forces traditional analysts to treat these assets seriously.
But I have to ask, isn't that just incredibly risky? I mean, from a normal corporate treasury perspective, holding billions in an asset as volatile as ETH, it sounds almost reckless.
And that's a really important question. It points to the maturity of the space. Now, the sources don't detail their exact hedging strategy, but the fact that they're holding that much suggests they see it as a core reserve asset, not just a short-term trade. But it also raises a deeper market question. When one company controls 4 million ETH, that's a huge chunk of the supply. It impacts liquidity, maybe even governance or staking. It creates this tension between huge institutional scale and the decentralized idea at the heart of Ethereum.
That's a great point. It's not just about the dollar value. It's about the structural change that this kind of adoption brings.
Exactly.
So for you listening, the key here is that these aren't just speculators anymore. These are major corporations treating digital tokens like strategic long-term assets.
And they're backing that belief with billions. They're betting on the utility.
Okay, so the numbers are huge, but numbers like that don't mean much without the legal and financial plumbing to support them. You can't run a $13 billion balance sheet on hope.
No, you need institutional-grade security. You need regulatory clarity.
And that brings us to what's happening in Asia, specifically Hong Kong. They seem to be moving really fast on this.
They are. The regulatory side is finally catching up with the capital, and Hong Kong is trying to lead the pack. The sources are clear. They're introducing new, very detailed rules for crypto infrastructure.
And this isn't just about setting up an exchange.
No, this is much deeper. It's about building the fundamental systems, the kind of reliable, audited frameworks that big traditional institutions demand.
And the specific target for these new rules, that's what makes this so significant. They're being designed with insurers in mind.
Yes.
Why single out insurers? They're pretty much the most risk-averse group out there.
Well, that's precisely the point. If you want to signal that an asset class has finally matured, getting insurers on board is the ultimate validation.
Because they're so conservative.
Exactly. They manage money across generations, pensions, life savings. They have incredibly strict rules about risk. So if digital assets are now stable and regulated enough for an insurer, well, then they're stable enough for pretty much everyone.
So what does that infrastructure actually look like? It can't just be a line on a spreadsheet.
Oh, absolutely not. For an insurer to touch this stuff, the government has to provide total clarity. That means things like audited custody, proving the assets are really there, held securely. It means setting specific capital rules like how much reserve cash an insurer needs to hold against their crypto.
I see.
By creating these frameworks, Hong Kong is basically saying these assets are now mature enough to be integrated into the most essential conservative parts of the financial system.
That completely changes the conversation, doesn't it? It goes from, is crypto even legal,
Mhm.
to, okay, how do we fit this into our low-risk portfolio?
It provides the certainty that big conservative capital has been waiting for. It bridges that gap between speculation and a regulated investment.
So we've got the huge assets pouring in. We've got the regulators building the architecture to manage it. The last piece of this puzzle is, who's funding the companies that make all this happen?
Right, the investment capital.
And that brings us to some high-conviction moves from some very well-known fund managers.
hmm The sources are highlighting some recent activity from Cathie Wood's ARK investment. They just made a pretty significant purchase.
Yeah, $26.1 million worth of shares. That's a serious injection of capital, especially from a firm that's famous for betting on long-term innovation.
It is. And what's key is they weren't buying a token. They were buying shares in a company operating in the space.
What does that tell you strategically?
It tells me they have deep conviction in the underlying infrastructure, the plumbing, They know that for a company like BMNR to hold $13 billion and for Hong Kong's insurers to be satisfied, you need a whole ecosystem of robust companies providing data, compliance, custody, all of it.
It's the picks and shovels play.
It is the classic picks and shovels play. They're betting on the companies that make the entire system work, not just on the price of one asset.
They're doing this now, right? During all this market volatility. That $26 million investment, that speaks volumes.
It really does. And for you, the listener, this is a leading indicator. It shows that despite any short-term noise in the market, the smart money sees the long-term adoption as, well, as basically inevitable. They're investing in the fundamental tech that's going to underpin finance for years to come.
When a firm like ARK puts 8 figures into that foundational layer, they're basically validating the whole enterprise.
They're saying, we believe this system is real and it's here to stay. It shows confidence in the entire ecosystem's move toward, mass institutional adoption.
So let's pull this all together. We've seen these 3 really powerful, distinct trends, but they're all pointing in the same direction. So one, you have these massive corporate balance sheets like BMNR with $13.2 billion in total and over 4 million ETH, making digital assets a core holding.
Right.
Then two, you have governments like Hong Kong building sophisticated regulations specifically for the most conservative players like insurers. That's a huge endorsement.
A massive one.
And then 3, you have the smart money, the influential fund managers like ARK, pouring millions into the actual infrastructure that makes points 1 and 2 possible.
And the key takeaway from all of that really is that digital assets are moving past that early adoption phase. This is the institutional era. The focus has completely shifted from just trading tokens to actually building the financial architecture, the plumbing, the guardrails. That's what's required to support this kind of scale.
The conversation has really shifted from, decentralized rebellion to essential global financial plumbing.
That's it. And building that plumbing is now the central story in this market.
So let me just leave you with one final thought to mull over. If Hong Kong is building these rules specifically so that insurers who manage these vast conservative pools of capital, like our pension funds, can safely get into the market, how long until those super high standards become the global benchmark, the minimum requirement everywhere?
That's a fascinating question.
And what happens when the world's trillion-dollar pension and insurance funds can finally start integrating these assets? How does that change our everyday insurance policies, our retirement savings over the next decade? That's the real scale of what we're tracking here.
A huge implication for how deeply this will reach into all of our lives.
That is all the time we have for this deep dive. Thank you so much for putting those huge numbers and complex regulations into context for us.
My pleasure.
And thank you for joining us. You've been listening to Corner Room. We'll catch you on the next deep dive.